Hello, viewers. Very good evening. Welcome all to this another session of Commodities Insights, Trends, and Forecasts. This is episode 6 of the series. Today, unlike Anup, who we used to have every session, today we have Saif, one of the major contributors of our daily reports. Even the recent commodity yearly report that you saw, Saif was one of the major contributor in that too. So, once again, thank you all for joining. So as you all are already aware, we at ICICI Direct, every Thursday, 4 p.m., we spend 1 hour for commodities. So last week, if you had joined the session, it was on Ask Us Anything on Commodities. And this week it is Commodities Insights, Trends and Forecast. So next week, if you join again, it will be either Ask Us Anything or How and Why to Trade Commodities. And the week after that, you'll again see Commodities Insights, Trend Forecast session 7. So I suggest you all the viewers to be active and attentive in the sessions, and I would suggest you all to please do join these sessions every week, every Thursday at 4 p.m. and ask us as many doubts as possible with respect to the commodities market. As I've been mentioning in the every session, globally, commodities markets is actually bigger than the equities markets. That's the importance given to the commodities markets. But it is only in India, commodities is a very small market compared to the equities. So there is a lot of opportunity in this market that you can delve into. So please be attentive in these sessions and do as many questions as possible and clear your queries with the product managers or with the business people or particularly the research analysts of commodities. Right. Now going into the session, today's sixth session for this series. As you all are aware, we usually discuss the insights from the past 2 weeks that had happened in the commodities market, the fundamentals and technicals. Then we discuss the current price trends. What are all the where are the commodities currently trading at? We will go through some major commodities like gold, silver, crude, natural gas, copper, वगैरह. And if you'd like to want to know about more commodities, also you can put in the chat box simultaneously, and we will take up those commodities also. And towards the end, we'll also discuss the forecast for the next 2 weeks, the price levels expected for the next 2 weeks. That will also again be discussed by Saif. So hope everyone is clear on this, and just quickly get into the agenda. If you're not aware yet, ICICI Direct has come out with the commodities yearly report for the calendar year 2025. It is available on the ICICI Direct website. You don't even have to be a client of ICICI Direct also. You can just open icicidirect.com, go into the commodities part. I'll just parallelly show it in my screen also. So this is the icicidirect.com website. And this at the top is the commodity product menu. You can click on the commodity. You can click on the products submenu here. And you can scroll down to see all the reports available, the morning, evening, weekly, monthly reports. Along with it, you can see the commodity yearly report. So you can just fill in your name, number, and name, email ID, and mobile number. Click on submit, and you'll be able to access your research, the research report for the year 2025. And this is how it would look like. So I would suggest you all to go through that. There is also a link provided in the description below. You can also click on that directly. Maybe you can get into the report directly. So other than that, today with help of Saif, I will try and cover most of the points which have been discussed in the yearly report. So if you look at the report, first we go through the synopsis, like what had happened actually in the last 1 year, in the year 2024 particularly. Which is the yearly return for different commodities. We can see here through the graphs where gold at MCX had raised by 21%, while in the global markets has raised by 27%. So why primarily this difference is because the customs that were brought down last year from 15% to 6% with respect to gold and silver imports, right? So that was one reason. And there is also rupee depreciation which happened against dollar. So these things put together is what had brought this difference of 21% in the Indian market at MCX and 27% in the global market. But conversely, if you look at silver, it is 17% at MCX and 21% increase in the global market. So is the case with, you can also check across other commodities also. But parallelly, if you also see what are all the factors that you'll have to look for which will determine the commodity price movements in the upcoming year, that is in the calendar year 2025. So primarily you look at the easing inflation scenario. The last 1 year or 1.5 years, you can see the interest rates being so tight, not only in India or US or in the major central banks across the world have been following tight rates because of increasing inflations, which has been coming down, which has been cooling down preferably. But with respect to US alone, we are expecting, owing to this Trump's scenario, we are still not clear about how many rate cuts we can actually expect in the upcoming year. As of now, from what we discussed in the last session, it is just status quo. That is, Fed is expecting to bring only one or at the max two rate cuts in this current financial year or in the current calendar year. Okay, so what with conversely on the other central banks like the European Bank or the other banks, they are being more dovish and looking forward to bring more rate cuts. But US particularly is not expected to bring as many rate cuts as we expect. Other than that, the dollar index has been strengthening with the Trump's policies expected to be more inflationary in nature primarily. And then there are trade war risks that are at the top of the mind owing to the tariffs that Trump might impose on many exporting countries or the major imports that come from other countries. Trump looks forward to impose tariffs. So there is this trade war risk also that is being expected for the upcoming year. And then the geopolitical tensions happening between Russia and Ukraine or in the Middle East, which had currently come down. There has been a ceasefire scenario, but still the Russia-Ukraine scenario is still going on. But Saif, what other major factors would you suggest to look forward in the year 2025? Over to you.
Yeah, hi. Good evening, everyone. Um, as already Arvind has covered all the points, all the major points which we have, which I have already mentioned in the report for 2025, and you can see in the screen as well. So let me come through 2024 for first. What happened in 2024 was the major reason for the gold prices to rally internationally was rate cut by US Federal Reserve by almost like 100 basis point. And another major point was the central bank buying. There was a strong central bank buying which we had seen in 2024, and it has been continuing from 2022. So that was the major reason why gold prices rallied. And yes, he correctly pointed out that why there was a difference between the percentage change in the MCX and the global. So that was majorly because of the duty which was cut by our finance minister in the budget. So that created a space of the difference which you can see in the M6 and the global. Whereas on the base metal side, if we see the base metals that performed positively, that was majorly because of the China coming up with a lot of stimulus packages to revive the economic growth, and that was supportive for the base metals. And on the domestic front, see, whenever there is a rupee depreciation, it will always support the M6 prices. So if we see rupee going from 82 to 86, that will push the prices higher. So the if we see gold at say 77,000, so if our rupee is depreciating more, then we can see the gold prices rising ahead like to 78. I'm just giving this just an example. It's not like 77 to 78 because the rupee has gone from 85 to 86 or something. It's just a comparison which I'm saying, like, so the prices always goes ahead if there is a depreciation in the Indian rupee. And if you see the crude oil prices showed a eventful year because of the geopolitical tensions in Europe or in the Middle East. And even the OPEC has delayed its planned output hike till 2025. Now coming to 2025, what are the major which we will be saying, like, what are the major factors? That will be the inflation. First of all, the easing inflation across the major countries. If we see the inflations across the major economies, whether you take Europe or you take US or you take UK, they are coming down from its peak, but we still have we are not expecting the US core inflation to go below the 2% target or reach it's expected to remain above the 2% target of the Fed. And that the major reason would be the inflationary effects of the new policies which the Donald Trump has coming up with regarding immigration or the trade or the tariffs and the taxes. So this are gonna have a bit of an inflationary effect, and because of which we don't expect US core inflation to go towards the 2% target. It is expected to remain above that. While in Europe, we are expecting the inflation to go below the target as well. And that's the reason we may see European Central Bank continuously cutting down the interest rate at the same pace which it did in 2024, while US Federal Reserve is not expected to cut down the interest rate the way which we saw in 2024. We may see one or two rate cuts, which is right now market is expecting right now because of the inflationary pressure. And second, dollar index. The dollar index always been will be on the stronger side because of the inflationary concerns. So this will be a positive, the trade war situations and everything, which would spur inflation. And because if there is a concerns between the trading partners of US, we may see upside movement in the dollar. Then I Sorry if there was some technical error. Just give me a moment. We'll be back in 2 minutes.
Yeah.
Yeah, Arvind, are you back?
Yeah, I'm back. Sorry,
Yeah,
somehow got
no
disconnected.
issue. Can you just share the PPT because there was
Yeah, I'm
like
just
yeah,
sharing.
yeah. Sorry, viewers, there was some technical error. Thank you. So I hope everyone can see this now. Uh, if you see another, as I've already mentioned about the rate cut, dollar index, and easing inflation, I've already covered this part. Can we go on the next slide, Arvind, please?
Yes.
Yeah. Yeah, then we can see the Chinese economy and geopolitical tension. These are another two factors. Now, if the trade war continues, or if there is a tariffs as expected, which the Donald Trump has mentioned during the campaigning, then it will be very negative. I mean to say, it will be negative for the Chinese economy because in 2024, if we see the Chinese economy, the exports were the main driver for the Chinese economy. So, if there are tariffs, it will hurt the exports, and it's gonna have a impact on the Chinese economic recovery. Geopolitical tensions, as we were already seeing that there was the Russia-Ukraine war or the Middle East concerns, which were going the issue between Iran and Israel, or the Israel and Hamas or Lebanon. But now there is a bit of which is a new update, which is like if we see there's a ceasefire between the Israel and the Hamas right now. I hope it continues and it may reduce the Middle East tensions if it continue the ceasefire has been properly move ahead with. So these are the major factors which we could see in the 2025, which may move the commodity prices. Over to you, Arvind.
Yeah, okay. So that was some points that we need to look for in the year 2025, as I had been mentioning. Parallelly, I request you all to please put any queries in the chat box, in the YouTube chat box. We are also parallel looking at the same and will answer your questions as much as possible. So going ahead, if we get into different commodity segments, like first we'll get into bullion. What are all the factors that will impact bullion prices? Is that trade war concerns? But before that, we will see what is the price levels, expected price levels for different commodities, parallelly as we discussed. So we can see for gold, particularly, it is expected to rise towards 85,000 on strong central bank buying and trade war concerns primarily. So what factors are primarily look for to this price levels, to reach this price levels, is the concerns. First of all, we are still expecting Trump had taken office on 20th Jan, but we're still expecting clarity on his policies, as I was mentioning on immigration policies, tax cuts, and of course the tariffs. That will have a major impact on the trade war concerns that we will get some clarity about. Other than that, the demand from central banks. In the last session, we discussed in detail like how different central banks have been buying. There has been a lot of buying spree among major central banks around the globe in the month of November. The data that we got for the month of November. So many tons of gold being added by the central banks into their reserves. Other than that, there is this reduced pace of rate cuts, particularly from US, as we have been discussing from the beginning. We are not expecting as many rate cuts by the US in this upcoming calendar year that will affect both the bullion prices, both gold and silver. And then the primary part is with respect to silver, which is expected to outperform gold in the upcoming year, primarily owing to the deficit of supply. So you can see gold is expected to rise to 85,000 levels, while silver is expected to rally towards 1,10,000 rupees per kilogram. So it's 85,000 is per gram and 1,10,000 rupees per kilogram for silver, primarily on market deficit and industrial demand. Yeah, so if you would like to add anything more on this market deficit, how long it had been continuing and how long we're expecting it to go further.
Sure, sure. I think so. We can go on that slide. So I think so. Even
Yeah,
the
I'm just
viewers
going on.
can view that. Okay. So let's. Do you want me to talk about the gold as well before that?
No, we'll just take up silver if
Okay, sure.
as we are in that flow. Yeah.
Okay. See, if we see the silver has been into deficit from past consecutively fourth year, and if we see the demand from the industrial sector have been growing drastically due to the green economy applications. Majorly, if we see in the photovoltaics, electrification of vehicles, or like an infrastructure of charging power stations, and the if now the rapid adoption of AI technologies, which see the demand for industrial sector is rising drastically, which will be very positive for the silver prices. Moreover, there is an investment demand during the it also act as a safe haven, it surges during the safe haven demand is there during the geopolitical tensions or the economic uncertainties as well, because it may follow the gold prices. So there is an investment demand which is expected to surge in the coming year due to the cut across the major economies, hope for the stimulus packages from China. So that will be again positive. And we are expecting silver prices to outperform gold. And in the international, we may see silver prices going around $37 to $38.
Okay, so these are some charts with respect to the market balance for silver for the
Yeah.
last since 2012. So you can see at 2022 there was a very low market balance at around minus 250. Right. So this market imbalance, like a low supply, has been continuing for the last 4 years. You can see the blue candles showing demand and the gray candle showing the supply. So you can see the blue candles being constantly above the silver candle for the last 4 years and expected to continue in the upcoming year also. So that is the major reason why we are expecting silver prices to go up to 1,10,000 per kilogram. Uh, Right. But Saif, can you give some points on this gold silver ratio? What is the ideal gold silver ratio? Or what had been the ideal gold silver ratio in the
See,
past few years?
I think so. I have covered it in the next slide. If we take into the next slide, we can even show the chart. See, this is if you see there is a gold silver ratio, which has been already moving in that, like, it's not able to surpass the 90 level. And we are expecting it to come back towards 80. So this indicates that the silver prices will be outperforming outperforming gold. So it has increased to 110 level during, I think so, during that COVID time when we saw a drastic demand for the safe haven or the gold, whereas the silver also works as an industrial, industrial metal. So whenever there is an impact on the industrial sector or somewhere, it gives a bit of negative impact on that. So the demand may go lower. But this time we are expecting the industrial demand to outperform. If we see above, if we see the silver demand on rising photovoltaics, we can see how the trend is going higher and higher in the PV sector. So this is a very positive reason, and a point for the silver prices to outperform gold, and we are expecting a ratio to come back towards go below 80, which is right now moving around 89 or 80, 88.
Okay, so we are expecting to for this ratio to go down below 80, right?
Yes,
So
yes,
so
yes.
so for everyone who is not clear about this concept, gold silver is ratio is nothing but just gold price divided by silver price for a particular quantity, for same quantity of gold and silver. So what does that mean? If gold is outperforming silver, the ratio will go up, and if silver is outperforming gold, the ratio will be coming down. So that's in general the concept. So this is one major, major data point that usually traders track in order to take positions in gold and silver. So that was primarily with respect to the Bullion outlook. Next, we'll go ahead with the energy outlook for crude oil and natural gas particularly. So we are expecting, okay, let's also look at the price levels expected for crude and natural gas. So crude
Arvind,
price,
can you just take, sorry to interrupt, can you just take on the gold side? I just want to show the viewers one of the chart which would help them to see the central bank buying, how it has been. Yeah,
yeah.
that's it. See, if you
Right.
see the top central banks gold purchases, I have shown a chart where if you can see how the China is like China or Russia, India or Turkey. So there are multiple central banks who have been continually buying the golds in their reserves to diversify, reserves to for financial or strategic reasons. So if you see from 2022, since 2022, the China has bought like around 258 tons of gold, or India has bought around more than 80 tons of gold. Turkey and the Poland, which we can see around 199 tons of gold they have added. So this is the kind of central bank buying. If this spree continues, this will be very positive for the gold prices, and that's the reason why we are looking gold prices to move around 85,000 in the coming year. Thank you. That's majorly which I wanted to show,
Right.
because it's a
Right. It was a major point with respect
yeah,
to gold, actually. This
yeah,
is the central bank buying is one major point for gold,
yeah.
for prices to rise, and while for silver, it is the deficit that we are looking at.
Deficit. Yeah, yeah.
Okay. With respect to energy commodities, that is crude and natural gas, we look at the price levels expected. Crude is in general expected to move south on particularly market surplus. So primarily crude oil is expected to be in surplus. There has not been enough drawdown from the crude oil inventories, and there has also been a lot of production growth from the non-OPEC countries. Even though the OPEC had decided to postpone the increase in the production, but still we can see a lot of stocks piling up with respect to oil and fuels. And also simultaneously, we can also see one of the major demanding country, which is China, with a very uncertain outlook for the upcoming year. So we're not having enough demand from China, from the major demanding countries also. And on the other side, the supplies are also going up. The reasons piling up to the crude oil prices going south. Am I right, Saif? Are there any other
Yeah,
points that we need
yeah,
to look at?
yeah, yeah. See, we are expecting NYMEX crude oil prices to go around like 60 to 65 to $60 in the coming year, and it may face a resistance near 85. So the major reason is the we are expecting I'm expecting there will be surplus outlook in this year, and even the growth in the oil production is coming from majorly from the non-OPEC countries. So and we are expecting to the oil prices the market to remain in surplus despite of OPEC plus delaying its production increase. So there will be an increase from the OPEC side, which is like 2.2 million barrels and 3.65 million barrels. That will be coming till 2026. So it's gonna take almost like 18 months for OPEC to bring back 2.2 million barrels into the market, but they will be gradually coming into the market. So again, that will be a negative for the crude oil prices, and they are sitting at a sizable spare amount of capacity, which can protect the market from any kind of event of any disruption. And if there is uh, that's what I think. Like if there is a sanctions on Iran from US, if there is a sanctions, it will give some comfort to the OPEC nations to increase the production, because the prices will not go that sharply downside or something like so. So there will be a balance in the market. So there will be the OPEC has the spare capacity to to protect the market from such kind of events. And again, the potential trade war in the Donald Trump second term will have a negative impact on the economic growth, and that will dent the demand for the crude oil prices. Only the risk to the prices would be if there is any disruption to oil flows through the Strait of Hormuz, which is a very important strait. Almost like 20% of the global consumption comes from that strait, from that route. So if Iran tries to block that route, if that's a big if, then it will have some negative impact on our on our view. Otherwise, the overall, if you see, the crude oil prices may trade in the range of $60 to 85.
Okay. And can you explain on what are the major non-OPEC countries? Because we are saying that we are
See, majorly the
expecting.
Canada, Brazil, we can say the Brazil, Canada will be the major, which and US are the major contribution from for the oil prices from the non-OPEC countries, I would say. And even the Donald Trump friendly policies will be very positive. There are chances that it may produce more crude oil, even more than the expectation. So that is very positive. Like that will sorry, that would be a negative for the crude oil prices.
Okay, right. So I was just trying to show this trade of Hormuz, which you're discussing,
Acha, yeah.
where
Okay.
major oil movements happen.
Yeah.
So this is that part in between Iran and the one
Yeah.
of the other
So if you see
countries.
the major, if you see there is a major the Persian Gulf, you can say the Persian Gulf from where the major oil goes, like the oil supplies go through that. So there is a bit risk if there is any disruption happening to the Strait of Hormuz, then only it may have a negative impact. I mean to say a positive impact for the crude oil prices to move on a positive side.
Right. And also on the other hand, we have also seen the ceasefire between
Yeah.
Iran and Hamas. So that situation is also cooling down, which might
Yes.
also add up to crude oil prices going down.
Yeah, that is also true. The easing, like whenever there is an ease in the Middle East tensions or any kind of geopolitical tensions, it will reduce the premium, that risk premium which is added to the prices that comes down. So we see the crude oil prices to lower down at such kind of situations.
Right, understood. Then going ahead with base metal outlook, I just wanted, say from you, explanation
Mhm.
on China's economic outlook and what about their economic support that have been trying to give in the last few months. We have been seeing that they have not been giving enough stimulus for increasing the demand for base metals or the crude oils. So China's scenario is primarily affecting both crude oil prices, the energy prices, and also base metal prices, primarily copper. So how look ahead with respect to the stimulus news from China? Are they going to increase more in the future?
See, China has given a lot of stimulus packages in the previous year. Even they have there were some policies which directly supported the real estate or property sector, whereas some of the policies which they come up or the stimulus packages they were not directly supportive for the real estate property sector or have directly supported the consumption. So there are chances that in this year, the China may come up with a lot of other stimulus packages which will support the consumption, the domestic consumption, which that is right now is weak. The domestic consumption is weak in China right now. So to recover the growth or the recovery, they have to come up with a lot of fiscal and with fiscal plus stimulus. This both packages are very important for China to come back this year for the economic recovery and achieve the 5% target. They are expected to reduce the RRR rate in the coming months as well. So if the interest rates goes down, a lot of money comes into the system and supportive to support the economic growth. Now, if there is a trade war which if we know the Trump after taking the office, he has proposed the potential trade the tariffs of around 25% on Canada and Mexico, whereas 10% on China starting from next month, but there is no clarity given till now. He has just mentioned that, and if we see the 10% is much more lower than 60%, which he has mentioned during the campaigning of during his campaign. So, and even he has asked his administration to review the go through the trade which they are with its partners, and they have to submit some report around April. So, majorly we'll come to know something around April in the this year ki what may get some clarity so if there is an imposition of tariffs of a higher level which he has mentioned during his campaign, then it will have a negative impact on the Chinese economic recovery, that which I have already mentioned, because in 2024 its exports were the main driver for the economic recovery. So in such situations, if the tariffs are go higher, the even the yuan will start depreciating drastically, and that will have a negative impact on the economic recovery. And somewhere or the other way, they have to come up with a lot of stimulus and fiscal packages to what do you say, the reduce the impact of the tariffs on the economy and the protect the the economic recovery from such kind of situations. And Base metals, if we see one by one, if we see the copper, if we see the copper market is expected to remain in surplus, so that will have a negative impact on the prices. Whereas the lead and zinc also are expected to remain in the surplus, whereas the aluminium market is expected to remain in deficit. So that will be positive for the aluminium prices, and aluminium demand is rising in the green energy, so that will be positive for the aluminium prices. And yeah, that's it. Anything else you want?
Yeah, okay. So I was just going through both in
Mhm,
energy and base metals, there are like similar scenario. There is this Trump's
mhm.
tariff situation, like trade war
Yeah.
fears. Then there is weak demand from China. Then there is also with both the commodities the market is in surplus mostly, or crude
Mm.
and copper primarily if you look at. So also parallelly, if I take you through the price levels expected in the base metals, there is copper is likely to slip towards 690 rupees. With this is on demand concerns. And aluminium, as Saif was mentioning, the prices are expected to rise towards 280 on market deficit. So we want to add anything on aluminium now? Should I take you to the slides? So this is the aluminium slides. Yeah, Saif, okay.
Yeah, see, why we are expecting aluminum prices to rise is, as I've already mentioned, the market is expected to remain in deficit. And again, the Russian aluminum producer major, the Rusal, which is plans to reduce its output by more than 6%, due to the soaring cost of the aluminium. If we see in the previous year, the aluminium prices were pretty high. So, that is one of the reasons why the major producer is expected to cut down its plan to reduce its output. That will again positive for the aluminum prices. Then the removal of the aluminum product exports tax rebate by China. So that will have a restrict the flow of the aluminum outside the country. So that will be again positive. That will reduce the supply in the market. So that will be positive for the aluminum prices again. And if we see the inventories in the LME, they are diminishing persistently. And again, I've already mentioned that the rising demands from the EV sector will be positive for the aluminum prices. So in the on the M6 side, we expect aluminum prices to rally till 280 levels.
Okay, thanks for that. So basically, so in general, the primary factor you can see that are affecting or the forecast for which we have taken the primary point is the Trump's scenario. The trade war situation or Trump imposing tariffs. So this was all taken in and experience from his first term. So during his first time, this has how he had been behaving with respect to the economy. So that's how we have taken those factors considering in. That's how market is discounting the prices for the next upcoming year also with respect to commodities. That's what I wanted to highlight here. So now that we have gone through the yearly report, I request you all to go through the report. The link is there in the description down. You can also go to the ICICI Direct website and download the report from there. I suggest you to go through the entire report word by word for better understanding. So now I would like to take some few questions. Uh, yeah, there is one on natural gas data. Yeah, I think Ramesh sir had suggested on this. Can you please be more specific on the natural gas posts? There is a dedicated team to access on the tools. Yeah, Mr. Babu Garu, we would like you to connect with us through the help desk or somehow so that we can help you more on your query with respect to the natural gas posts. I hope that will help you. Other than that, there is one on gold silver ratio is not clear as gold price for 10 grams is 77K as of now and silver in terms of kg. Yeah, the gold silver ratio, Shripad ji, as I've been mentioning, gold and silver prices you need to consider for the same quantity. For example, if gold you are considering 10 grams, 77,000 for example. So silver B you will have to consider in 10 grams, so which would be 965, right? So 1000 by 965 will be approximately around 80. So that's how you calculate the gold silver ratio. So you can understand gold is at the numerator and silver is the denominator. So if gold is outperforming, the ratio will also go up. If the denominator is outperforming, that is if silver prices is moving more than gold prices, then obviously the ratio will be coming down. So that's how the gold silver ratio works. Silver, is there possibility of testing downside again? If so, how much GL can go down? Safe sir, is this is for you. If silver, is there any possibility of testing downside again?
Okay.
If
Um,
yes, how much it would go down? Yeah.
acha. Yeah, the levels you meant to say, right? Okay. See, majorly, if the silver prices, if comes down maximum till, like, 87 to 86,000, there is a major support for that. Uh, Below that, if it goes, then there are multiple supports which will be around 85 to 82,500, and below that, then it's gonna be a disaster. So the silver prices then will correct drastically if it goes beyond 82 to 83,000. If it goes beyond that, but I don't think that the prices are gonna correct so much. Even if it comes till 87, it is okay. 87 to 86,000, you can start accumulating. See, this is the range where you can start accumulating, and the silver prices will go higher. But I don't think so. It should go below 86 or, 86,000 right now. And
Okay,
the
great.
worst to worst scenario, if it goes till 83, 82,000 and beyond that, then it's over. Then there will be a reversal in the trend.
Okay. Yeah, with respect to these research recommendations, there is a 2-3 member team who dedicatedly work on the commodity research reports as well as the research recommendations. With the recommendations having a success rate, achievement rate of as high as 69-70%, if I'm not wrong, Saif.
Yeah, it is around 69 to 70%. 68 to
Exactly.
70% we have the strike rate.
Yeah, that is the strike rate for our commodity research calls specifically. And yeah, if you still have any more queries on any particular calls, we are so much happy to help you out. Please try and reach out to the help desk team. And what is the effect of US sanctions on Russian tankers? Is it only on India or overall crude market? This
It's all
question
overall
comes.
on the. It's going to be overall on the crude market. Like, if there is an sanctions on the crude oil from, whether it is from Russia or whether it's from the Iran, so it majorly have an impact on the countries which import a lot of oil from Russia. So that is like China and India. So there it has a bit of, like, what do you say, positive for the crude oil prices, but if we are able to divert, get those supply from the other countries, which I've already said, the OPEC has the spare capacity. So if OPEC starts increasing the capacity, or increasing the, or bringing back the crude oil which they have cut down sooner, then this impact will it gets nullified majorly, kind of. And it depends how the trade happens, and if, like, there is a chances that even the Donald Trump may use such kind of for to, end the war between Russia and Ukraine. So maybe in coming future, the Donald Trump may withdraw the sanctions as well from the Russia.
Okay, right. There's one from Mr. Bhaskaran. Question: copper target price rupees 690 given. Um, I'm not clear about the question, but Saif, can you take us through copper price levels and what price expected for this year
Sorry, what you said?
with respect to copper?
Yeah,
Question is like copper target price rupees 690 given, question
yeah.
mark. So I don't understand the question. So if we can take us to the price levels. Yeah.
Um, 690 is the level which we have given, but I'm not understanding the question.
Yeah,
Like,
exactly. I don't understand the question if he is talking anything about particular research call or something, but you can just take us to the price levels that might help him.
Okay, see, right now, if you go to see, the copper prices are not going beyond 840 levels from couple of days, if we see. So it is expected to correct in a, in a week's time or something around 820 to 815 levels. And if the copper prices go beyond 800, and if it sustains below the 800 level on a be like for a couple of time, weeks, or you can say, then we may see copper prices coming down till 690 level in the coming months. And if there is a escalation of the trade war or something situations happen, that it will be a negative for the base metal prices.
Okay. Okay. Yeah, and just one more disclaimer for all the viewers. If any websites or anything else that we are trying to show in this webinar in order to help you with the information with respect to commodities, it is only for educational purposes, and we are not promoting any particular website or organization. So even this report, as ICICI Direct is a SEBI registered research team with respect to commodities here, we have come out with this and giving out to you. You can access any reports available online. Yeah, going ahead with more questions. Is it a chance of NRIs can buy SGBs? Okay, currently, Miss Savita, there's SGBs are not coming up anymore now. There might not be an official communication on the same, but as of now, there are no new sovereign gold bond tranches that are being released by RBI. On the other hand, if you're looking at commodities through different modes, like either through exchange or through commodity derivatives, again, NRIs are not allowed to participate in the commodity derivatives on the exchange in the Indian market. So I hope that clears your query. Outlook for natural gas price next month, say
Outlook for natural gas price?
natural gas
Yeah,
for the
sure.
next month. Yeah.
Yeah, perfect. Okay.
If you'd like to share your screen or show any charts, feel
Okay,
free to share.
sure. I can do that.
Okay, so meanwhile, while Saif is opening his charts with respect to natural gas, just a quick recap what we discussed in the previous session. We spoke on what that Trump is going to assume office on Jan 20th, and we were expecting that he would give more clarities on what he's going to come up with the policies with respect to tariffs and all those things. So as and with that, Trump assumed office on 20 Jan, and he discussed some important topics, some important interesting topics he touched upon in his inaugural speech. Uh, Saif, if you're ready, you can take up the screen.
Yeah, I can you see my screen?
It's loading at my end. Yeah, it's visible online.
Okay.
Yes, you can do it.
Okay. So the question was what are the, like, natural gas
The
prices
natural
to
gas.
natural
Yes,
gas?
for the
Yeah.
next month.
See, the
Yeah.
natural gas prices right now, we will not look at the January contract. We'll look at the February contract, which is trading around 303.90 right now. So it is expected to see, if we see this is the 320 level is a major resistance. If it goes beyond this, we may see a sharp momentum, like 325. If we see, this is the level which I'm talking about, and the major support level will be this 285, around 285 to 280 levels. If it goes beyond this, just give it may correct down back to 260 levels. Otherwise, the trend looks to be positive. It may rally back till 320, and beyond 320, it may go till 325 levels.
Okay.
Yeah, so this
Thank you
is
for that.
it looks on a weekly chart also. If you look, it looks pretty positive right now. There is a a good support near this. On a daily chart, it was around 280. Around on the weekly chart, if you go to say around 275 to 74 is a good support level. Overall, the trend looks positive. The natural gas looks positive on the for the next month as well.
Okay, noted.
Yeah.
There is one query from account. Uh, just a heads up for everyone, this session going on will not be recorded and will not be available because the news that we discuss now will be going of waste because of previous weeks or 2 weeks ago news that we'll be discussing here. So this will not be recorded, will not be available. So suggest you to regularly participate and be present in the sessions every Thursday at 4 p.m. so that you will be up to date with the market, the commodities market. Yeah, and one follow-up query from Ms. Savita. If no, then gold ETFs and digital gold, how we can buy? Yeah, I believe through the secondary markets, you can of course go for ETF, gold ETF, silver ETFs, or maybe SGBs too with respect to the secondary market that I'm speaking. And if you're asking about digital gold, it does not come under the exchanges or the SEBI's purview. So there are some different websites for that with respect to digital gold. That of course I believe you can buy digital gold also. But I suggest you to do enough market research on digital gold or other modes of buying gold, and then take your decisions. Right. Where and how to check inventory of NG on every Thursday? Okay, Mr. Kailas, there is multiple resources, multiple sources on online like investing.com. और उसके अलावा तो we have our own research reports coming out every day, every morning, every evening, and weekly. I'll also show you where it is visible on the ICICI Direct website. Just what I showed at the beginning of the session. Just you go into icicidirect.com website, you don't even have to log in. There is this commodity product at the top menu, then go into the product submenu. Then you will be able to see the reports section here: daily morning, daily evening, weekly and monthly reports. And there is also this commodity yearly report that we discussed now. The link for that is also available here. You can access these reports here. So in those, so why I was mentioning this, in these reports also towards the end, you'll be able to see this economic calendar here. So in this economic calendar, you'll be able to see the some major data points that will be released. For example, today's report includes the crude oil inventories data coming out at around 9:30 p.m. Right. So other than that, there is also this unemployment claims, which is a major high impacting data point, which is expected at around 7 p.m. So you can go through this research reports for the economic calendar. There is also investing.com. This is again another economic calendar from the investing.com website you can refer to. Not having stop loss option is a big handicap and would like to have GTD or stop loss feature ASAP. Please take this on priority. Yes, Mr. Sanju, thanks for that feedback. And we are working on this. We are working on GTD. We'll go live as soon as possible. Just give us some time and we'll come up with this feature to you. Mr. Ajay, why is there significant difference between natural gas price for 2 months? Say if
I didn't get you.
why is there a significant difference between natural gas price for 2 months?
Price for two. So it depends upon. See, this is a very cyclical commodity. It depends majorly for moves on the forecast of the weather conditions. So if the weather conditions and the next next week or like next month or coming months, like when if the winters are not expected to be harsh, the demand is expected to be lower. So if we see, there is always the recent contract will be higher, because if you see the next coming weeks, or there is an expectation that the weathers will be very harsh. So the demand for the natural gas is expected to go higher. So that's the reason why we may see, it depends upon the demand supply concern. So demand supply. So that's the reason why we may see the difference in the natural gas prices in the two contracts.
Right. Okay. What will be the target for natural gas, Mr. Praful? It was, I believe, it was already discussed. You can scroll back a little bit for the natural gas price discussion. Mr. Jyoti Prakash says the push notification link is not redirecting to the selected contract for advisory call. Not redirecting to select for advisory call. Please update your application for the issue. Okay. Okay. If you're mentioning about the research calls, yes, we will. The redirection is not going to the selected contract. Understood, Jyoti Prakash ji. That's a valid input. We will take that up. We'll try and incorporate it as soon as possible. Natural gas price 342. What chart you are watching? Said that the chart was, I believe, was it daily chart?
Yeah, it was a daily chart which I have shown. Even the daily and the weekly chart, I have shown both the charts. So you want me to share it again or something?
That should be okay. Mr. Surinder, this one's for you. It was both daily and weekly chart. If you want it up, please put in the chat. We can show it up, put it up again if it is required. Which session is more stable, morning Asian session or evening US session? I see morning session moves are drastically negated. Move opposite in the evening session, vice versa.
Okay. You want me to take it?
Yeah, sure.
Okay.
Sure.
See, evening sessions majorly are too volatile if we see for the commodity markets. That's majorly because we see a lot of economic data from US coming up in the evening session. And our markets close by around 11:55, and during the winter sessions. And so what happens is, like, if the US markets is still on in the even our markets closed. So if there is some kind of movement which has been not captured by a market, it happens in the morning session to the next day morning session. And in the morning session also, if you see, we are trading with the Asian markets, and then we may see a that time we don't see much of the volatility, because the evening session mein jo hua tha, whatever has happened, that has been um, captured in the morning. Then later on, the when the European market starts, then we again see some movement in the commodity markets and more movements we see in the evening market. So I hope I have clarified your query.
Right, right. But I believe there is a comparison between the Asian session and the
Hmm.
US session in the evening.
Yeah,
So,
yeah.
right. Mr. Abhishek, I did not understand your query. Request you to please type in again if there are any spelling mistakes. Are there any ETF on commodity instead of futures, which is risky? Yes, the account name, the question is from the account name enjoying. Uh, there are ETFs on gold and silver. There might be some base metal ETFs also expected in the future, but not in the near future. But as of now, gold and silver ETFs are available in the secondary market. You can easily buy and sell. No, so each share of gold or silver ETF would be around 60 to 80 rupees each share. So you can try those ETFs for commodities. Please give idea about website to be checked for crude at the end if you get spare time. Thanks. Yeah, even for crude or for any commodity with respect to the fundamentals or the technicals. One is our own research reports that we would suggest. I showed you the location where the reports are available. So in these reports, you can see both fundamentals and technical points. So here, for example, you can see this is the today's morning report that was released. So on the right side, you can see fundamentals. On the left side, you can see charts. There are also price levels, pivot levels given against every commodity for you to go through, along with the economic calendar. And also, if you wish to go ahead with any other website, as I said, economic calendar, so the investing.com is one website where you can go through. So there are many other online applications you can try it. Where to find IV data for natural gas and crude oil? Sir, where do we get this IV data for natural gas and crude oil?
Actually, it's a paid services. I don't think so. You get it anywhere on a free websites. Majorly, we look into the Bloomberg or the paid sources.
Okay. Yeah, so that one's for you, Mr. Prakash. Sinel soy in no chart trend is reading 302 and right side watch list reads 343 NG chart. I believe there are some questions, some queries on the NG chart. If you can put it up again, say we can just cover it through.
Okay, sure. As Arvind has mentioned, we are not promoting any websites. It's just
Mhm.
for the knowledge purpose, and I'm just showing you the charts, which early on the for the knowledge purpose as well. Um,
Yeah, it's visible. You
okay,
can.
yeah. So this is an NG chart. If you can see again,
It says in no chart trend is reading 302 and the right side list watch list reads 343
I don't get
in
it what it
natural gas.
means.
On
Three
the right
four
side watch
three.
list natural gas says
Acha,
343.
that is okay. That's a January contract price, and I'm showing the chart which I'm showing is a February contract. See, because the January contract will expire if just collect me in the like around 28 or something, and that's the reason. And you get the 5 days. Your like Arvind may explain you about the what margins increases and all that stuff. So that's the reason why we prefer going ahead with the next contract. So if you want the recent contract, I can show you, I can give you the labels for the recent contract as well, but it would be much better to trade in the next contract if you want.
Yeah, okay. So I thought just quickly we'll run through some major points that I've compiled down for this session. I'm just sharing my screen.
Yeah.
So there are a few fundamentals and fundamental points that we had in the last uh, 1-2 weeks. So one major thing was this Trump assuming office on 20th Jan. So he touched upon, as I was mentioning, I touched upon some major news, like some immigrants news with respect to the southern U.S. Mexico border, and he discussed on how he would increase the security along that border. And he also talked about manned Mars mission and all, while Elon Musk was sitting behind him. But some important points that we can take up is like he was talking about taking back the Panama Canal. which is right in between North America and South America, which connects trade between the Pacific Ocean and the Atlantic Ocean. So why this is important primarily is I just took out this map also. So this is where exactly Panama Canal lies, and you can see throughout this border, this is the only one sea route through which ships can travel through. So you can imagine how important this Panama Canal route is. And the Pacific, if you're looking at the countries bordering the Pacific Ocean, which is the Japan, China, and all those Australia and all those small countries to the left, and in the Atlantic Ocean side, you can see the Eastern America, the Western Europe, UK, Ireland, and the Western Africa, and all these areas being connected through this particular trade route. So that's how Panama Canal is important. So why I'm mentioning this is he spoke about taking back this Panama Canal to be maintained by US again, which is currently being maintained by the Panama government by themselves. So that was one point he touched upon. Uh, then
And
he spoke.
sorry to interrupt, Arvind.
It's okay.
Even
Yeah.
in our yearly report, we have shown the Panama Canal, how much the ships have moved, and how the issues in the Red Sea has supported the movement of the ships from the Panama Canal as well. So, if you want, you can go through that slide as well, just for
Right.
a
Exactly.
knowledge purpose. Yeah. Sorry.
Exactly. So there also needs to be some more knowledge on this geography also, this Panama Canal, Strait of Hormuz, Red Sea, all these major trade points in the midst of oceans or the seas where major trade activities happen, right? And Trump also signaled on some tariffs that Saif was mentioning. On China, he was suggesting 10% tariffs, and above that, Canada and Mexico was suggesting 25% of tariffs. But still no clarity expected to get implemented by next month. We are awaited to see those news also. So yeah, so in general, the policies are awaited on tariffs, immigration, and tax cut points, and all those things. And if you look at bullion, there are eyes on Trump's potential tariff plans again, one of the major point which would impact bullion prices. Other than the tariffs on China, Canada, and Mexico, he also suggested duties on the European imports too. While ECB, the European Central Bank, is currently in a dovish stance with respect to bullion. So this might act as a support to the bullion prices if 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 a major central bank is being dovish. And there is also US initial jobless claims data that is expected today at around 7 p.m. And then there is simultaneously the World Economic Forum annual meeting happening on currently. It will happen till tomorrow. So some fundamentals that you'll have to look forward with respect to billion. But yeah, and then in our next session, in the seventh session, we will discuss on these Trump's the policies that he had come out with, if possible. Then moving ahead to energy, there is again the impact of feared trade wars on, which is weighing on the oil prices. Then, why this fair trade war is weighing on oil prices? Because this might bring down the economic activity. If there is trade war, if there is a lot of tariffs, if there are a lot of impositions on doing free trade, then the trade activities will come down. So if that is if the trade activities are coming down, then simultaneously the demand for oils and fuels will also be coming down. That's why it is weighing on oil prices, and the prices would go down. And there is, on the other hand, a rise in the stockpiles of both oils and fuels, which is again weighing down on the oil prices. There has anyhow been an easing tensions between Hamas and Israel, which will again pull down the premiums that have been prevailing on the oil prices. And there are also some US sanctions expected on Russia. One small point which might support the crude oil prices. US sanctions on Russia are expected because of Russia trying. US expects Russia to pull themselves back from the Ukraine's scenario. So because of which sanctions are expected on Russia from US. Then going ahead to base metals, again, there is a trade war, which again will have an impact on the copper prices too. So this trade war will impact on all the industrial commodities primarily. So the industrial commodities primarily are the base metals and the energy or the fuel commodities, right? So both on crude oil and the base metal prices, this trade war will have an impact, bringing down the economic activity. And also from China, as we discussed, there has been weaker demand for the industrial metals. Okay, so any other points that you would like to add, say, because
No,
we're
I think
already
so.
at
We
final.
have majorly covered everything, and you have already given a recap. So I don't think anything to be added right now as such. Still, if you
Yeah.
have any queries or something, we can take that.
Okay. Any other particular commodity we discussed on natural gas? Would you like to share your charts with respect to gold and silver too? We'll
Sure,
just
I
take that
can.
up and close up. Yeah.
Sure, I can. I will share the. Let's go ahead with and look at the gold chart. If you look at the international gold chart, it has broken this, like, the, and it looks very positive. And if it sustains above this level as well, it may go till 2790, the one which it had made previously high, and even make the new high as well. So overall, the gold prices looks to be pretty positive right now. On the silver side, if we see the international silver, if you see that it is not able to break 31 right now. So that is the major resistance, and below, if you see, it is it is pretty moving in the range of 30 to 31 right now. If it breaks 31, we may see a sharp upside till 32, and there is a positiveness in the silver prices as well. And copper we have already spoken about. So if we see, the copper is holding an 840 levels, which is a strong resistance right now. As long as it remains below this 840 level, the prices are expected to correct down till 822 to 815, and below that 815 we may see it coming down till 800 to 795. And even if it takes supports and give may come back, pull back again, and may give a downside. If it breaks below this 800 level, then we may see a sharp correction in the copper prices. Otherwise, it will move in this range as well for a pretty long time. And aluminum, maybe it is expected to correct down till 250 levels, but maybe if it's holds this support, it may again bounce back. Otherwise, it will come down, and then it may range in this moment and come down till 240 level as well. Um, Crude oil prices, as I've already mentioned, it is trading in a negative side right now. So if we see in the internationally also, it took support near, didn't go beyond 80, does not sustain beyond that, and it corrected again in this. If you see on the M6, it may come down till 6,400 level, and if it breaks this, and we may see 6,200 level. And on the upper hand, the 6,000, this is the major resistance, 6,700 to 6,800 level right now.
Okay,
So
yeah. So
that's
that was a major wrap on commodity prices for you. Yeah.
yeah.
So I think we're a lot of time into five. We're past five. So it's just for all the viewers, I suggest you to please keep joining these sessions as I suggested. These sessions will not be recorded going on here on. So please do join the sessions live and get your queries cleared. And yeah, for the next week, coming Thursday, 4 p.m., Mr. Ramesh, business head for commodities at ICICI Direct, and Miss Beauty to Be product manager, and either Saif or Anup will be there to take you through, either ask us anything on commodities or in general to discuss how and why to trade commodities at ICICI Direct. So please stay tuned for that session. And after that, we will again come up with the seventh session of this current series. Until then, thank you all. Thank you, Saif. Thank you.
Thank you. Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.